E for eminywizard.com and marketwizards.com, reminding traders to use risk capital they can afford to lose. So at the end of the IB, we're double bottom testing. We can see that despite a great bounce into the gap zone, we've had a steady stream of selling, as we have had for quite a while. We know we can go to any low in these type moves, and that's the reason why we always hit one more bounce. And if it doesn't work, take our stop out. The test of the year open is 26.75 and a quarter. Big idea. And we've talked about potential targets lower than that, but first things first. I still think we have to be somewhat conservative because we can at any time get a snapback. And every snap has been met with selling, so that tells us we're still in a corrective market. We are into a territory that I want you to understand is an area the boys really need to start to defend or in trouble. Just like the 98 and a quarter, they've got to defend that. So far, that's not been done, but the day's not over. And this neckline was broken, and we turned the corner, and here we've been selling off ever since. So we're going to look at a couple other frames to take a look. And charts really, once you're used to looking at patterns, you should see the pattern regardless of the time frame. Potential targets today, we talked about first important targets, if we were to break the 78, would be the 75 and a quarter. And then obviously that 73 to 71 we just talked about. Thank you, Zeke. New low day for NQ. And these are all potential targets. So we call them support targets. We don't know if we'll get there. And we don't know if they'll be exceeded, but those are the next ideas based on measured moves and based on psychology and based on natural factors like 75 and a quarter. Right there, bingo. If you are short, stops down. 73 we said was a potential. Stops down. Never let this bleed back against you. And by that, I mean you can't give up 7 points to make one more. So bring your stops down if you are short. This is a 60-minute chart. Stops down. Said 75 and a quarter to 73s to 71. Not bad. Bring your stops down. Make sure you get paid. Don't squander it. Still making lower highs, lower lows. Okay, pattern recognition. What are we measuring on this chart? Anybody know? Study I put on with the widget. Venture a guess. Z pattern. Yep. But what's the frame? What's my time frame on this? And yes, it could be definitely construed as the Z pattern. Look at these lows that have held in here. You have to be willing to do work most traders aren't committed enough to do, to see some of these relationships. Now take a guess. Should make it a little bit easier for you. What do we got? Come on. You're lost. All right. Well, let's talk about it. It's okay. It, you know what? I'm one of those guys that has profited very well from GPS because now my wife doesn't keep saying to me, why don't you pull into the gas station? Just ask for directions. Because, man, we don't do that. No, we got to be, heroes. Macho man. What's the time frame? And that the point I'm making is all the charts look the same once we put an analysis on them. We know that that's the pipe and this is the middle, correct? And we know that that's held a double for now, correct? So that's been supportive. We also know that this region up here above 2860 has been resistance. And we know that 2510 is support based on this chart. It's a 2-year chart. This is the middle of a 2-year swing. Melissa, you got it. It's a 2-year range. So I submit to you that once we start to learn this type of a structure, then we can apply it to intraday range, or we can go back 2 years or whatever, and we can see these things that most traders don't see. Tails underneath the middle. So this tells us this 2600 is a big idea in a 2-year battle. We're going to keep an eye on this chart. And we can see just underneath us that we have not had a lot of staying power because of these tails, right? So that's sending a message to our brain. Be careful here. We've not been able to get under here and close under here. Is that helpful? I mean, I told you today we were going to spend a couple minutes trying to do a few teaching ideas, not just making the calls and I think it's this, I think it's that. I want you to understand the power of the system we've got. The target that we had, 75 to 73 to 71, is obviously profit-taking move. Hitting the middle, this 85 is the middle of our RTH range. And while you can play these trades, we said be careful today about sharp bounces. we like the idea of coming in and doing our trend trade and try to get to our targets. That's the thrust of what we're trying to do, to go with the trend instead of always trying to guess this. This is a Z pattern. And this is RTH side by side. We're looking at, obviously, key idea, yesterday's low. And this is a 456 trade. And this is just how fast you can get your swings and your bounces in this type of environment. And like I said, you don't want to give back 8 or 10 points just because you think you can make 1 or 2 more. That's the hard part, just stepping out saying, okay, I'm good. Let me take another look. So now we know. Here's a 4 and here's a 5 based on the current range. So first target has to be for the longs has to be to get by 88s. And this is typical, these sharp bounces and then another sell, and a sharp bounce, another sell. 94, our middle for the day right now. And let's see, primary trade is technically not over until the end of the morning. Currently, using the RTH, we've got a primary trade has come south side unless we violate the high of the morning. And that's the way it should be based on what we were seeing with the moving averages. And it is a retest of yesterday's low. Anybody long side, good fortune above the 88s. And one of these moves, one day we'll get a move that just keeps on going. We get that little sinker, and then we'll get a poke, and then a pullback, and then keep on running again. But not yet. Got to break the blue line first. NQs have sold off also. Remember the goal, 4 or 5 points per contract a day. And then whatever you can do above and beyond that is accumulating for the next day. Sharp bounces seemingly out of nowhere. Move this down here. There's ebb and flow as traders take profits. And this is a look at the corrective move. And by that, we're talking about that 29.47 high down to that 26.03 low. The bounce up, right? You should start to be able to identify these different ideas based on things we're talking about and use them for every different swing or time frame that you look at. So from that low, let me at least draw this line here to complete this was a trend line that got broken. But I'm going to show that as the move down and the contra to that move. And obviously now we've got a contra to this move. And you have to see, this is sequence trading. You have to understand the market as this type of a move. So these traders were hoping to have a home run and keep on going, but instead we've come back to basically challenge, get that out of there, this range from here to here. So that's the range that currently is being fought. Got a double top at the 2820. So this is very, very key in directionality. If we can't take that out, that's still resistance coming downside. And obviously step by step. But this is the range right now that we need to concern ourselves with. And then if you want to shrink the size of the ring, those three boxes. Support box right now. Fighting box, you can see it. And resistance box. Forget this box for now. Forget this one for now. Just focus on these three. So we already know when we started today, I said this would appear to be our current battle. Remember, I think I posted the chart. So this one had been abandoned. 32 is going to be a key. And then this 89. So this is currently the primary box that's trying to get resolved. Below 89's good for the shorts. Above 32's good for the longs. And in between is the dog fight. So currently, if we can't get back and hold above 89, then we know this is our next support. Basis this range. And they're not always going to be 100% accurate. But it's a theoretical concept that helps us to understand the big boys and what they're thinking. And here's a look at a swing from the high of 18 back to our low. And I've just set this. This again is the E widget, and I've set this for the high at 18. And this swing low, whatever this is continuing out. I can keep adding days to this, whatever. And I want to record the new lows and then reframe this. And then as the market evolves, we get new middles and we get new, this is done automatically for me. So already know areas that are going to be first targets, second target before you can even think about the third one. And this was left on from a previous chart. A different level that I had obviously set as a support level. And the resistance back here. If you study and break it apart into smaller pieces, you'll start to get an edge. I'm not saying you're going to win every trade. That's impossible. But you will have an edge. And this was a neckline break right here. You can see it. Right? Touch at least 3 places if you can, and then the neckline break. Boom. Very important concept in trading, this diagonal line. when I first started, that's all I was drawing because I was reading about it. Okay, diagonal line, and then never got the idea of drawing horizontal lines. And I read some stuff by John Murphy, and that really helped to balance me out and to see there were other ideas too. Keep learning. That's all I can tell you.